goods and off or even reverse.
Test. Okay, we are up and running. Hi all, and welcome to another edition of I almost said midday market review. That comes afterwards. This is YouTube Live, TraderCast YouTube Live, short and sweet, fast and furious. We're gonna do this very quickly. I'm starting today's session about 15 minutes, slightly 15 minutes earlier than normal. I would normally start this at 1:30 London time or UK time, but I'm starting it earlier because we have a very important economic data release which will trigger massive volatility across various markets, mainly US dollar, but then also gold and oil and also equities as well. And I'll talk to you about it in a minute. So very briefly, my name is Phil and I'll be your presenter today. I don't want to bore you with all this stuff. If you're looking for a community, check us out on TraderCast.com. If you're looking for education, if you're brand new, hopefully I'm not confusing you with what I'm saying, check us out on mytradingskills.com. My courses are there. Some of them are completely free. Check them out. Over the past 10 years, I had the privilege of speaking in front of various different industry events and managed to teach many people how to trade. Some of them were brand new, some of them were experienced and they needed help with a specific area of their trading. Big disclaimer, because I'll be talking about markets in particular. These are my opinions and experience only, rather than advice. I don't have the indication of your personal investment and trading objectives. And what I'm doing here is I'm doing it as a proof of concept. What I'm doing here is I'm keeping it very simple. No fancy indicators, very simple trend recognition, very simple price action trading. I think beginners, newcomers to trading after some level of education and testing in their demo account should be able to do this. Or a lower end, early stages of intermediate traders would be able to do this. It's not complicated. So what I'm trying to do is basically this is just practical application of what some of our courses teach.
So heads up then, moving into 10 minutes now until we get CPI for January. Month on month, we're looking for 0.5% on a prior revised 0.6 from 0.5%. The range 0.2 to 0.7%.
Newsfeed on, so
year on year, we're looking for 7.3% on a prior 7%. The range 7 to 7.6%. Ex-food and energy month on month, we're looking for 0.5 on a prior 0.6 with the ex-food and energy year on year. We're looking for 5.9% on a prior 5.5%. The CPI core index seasonally adjusted, we're looking for 286.065 on a prior revised 284.77. Moving to the weekly initial jobless claims, we're looking for 230,000 on a prior 238,000. With the initial jobless claims, we're looking for 1.615 million on a prior 1.628 million.
Okay, a couple of positions open. Yesterday I was long from 88 on WTI crude.
So looking at the note here from HSBC, they expect at headline CPI rose 0.5% month on month.
I'm gonna make this quiet. I've closed 1/3 of my position at 88.65 and then another third at 89.30. Now, for those of you who know what I've done yesterday, and that was basically set up the day before, you know I'm looking for 93, the ultimate take profit level, but I was telling you that I'll be taking partial profits as we go along. So I'll show you that now. And I'm still short euro dollar, and this is from 114.28. This is a new entry, and I might be in this position today. I'll see how the market reacts to CPI. Now let me just show you those couple of trades first. So this is a euro dollar. This is currently a losing trade. What you're seeing here is this is a 15-minute time frame price action. Longer term price action appears to be still bearish, but I am reserving the right that potentially price can spike higher after the CPI number, basically inflation number in US. And my stop is at 114.55. If the price goes there, I'll be stopped out, and this would be a losing trade. It's fairly a small position. I'm making a loss of about $40 on this trade at the moment. Okay, the other position that I have open is WTI crude, and WTI crude, I am in the money I took 2 partial profits already on this trade. My entry was at 88 and my stop loss was initially at 85.50, really wide stop, and then moved it towards 86.50, 87, and then when I took the partial profits I moved the stop at break even, and now my stop is above my entry. Stop is now here, okay, locking in another 13 points. I'm very happy with this trade at the moment. I think we could potentially see a spike higher depending what happens with dollar in about 7 minutes now, but happy to keep this position open. So I have, you can see I have plus 4 contracts here. These are 4 mini contracts on CFDs. I had 10 mini contracts on CFD, which would be equal to one contract on futures or thereabout. Or if you're spread trading, it's 10 per point. If you are trading CFDs or other derivatives, these are basically 10 mini contracts. If you're trading futures, it's one contract for crude oil. That was my position. So I took third off, and then I took third off, and I moved the stop loss. I'm looking for the spike through 90 towards 93. Now, depending what contract you trade, some of the prices that you might see on your brokers might be futures contracts, and they're showing you a different price. So this is the current front-running futures month, and this price is showing 90.70, where my price was showing 89.77. So there's a difference in what you trade, obviously, and I don't want to kind of dwell too much on this, but if you understand how the pricing works, that's basically where we are with crude oil. So really happy with this trade. I'm gonna keep it open. Now let me just tell you where we are with CPI and why is that important. And I don't want to make this too boring for some of you who are brand new, and I don't want to bamboozle you in any way, but CPI is economic data release that tells us inflation levels in US. So the logic is the higher the inflation, the more likely is that central bank, i.e. Federal Reserve, will be hiking rates. If they're hiking rates, that causes US dollar to rally. Okay, if inflation is the same or dips, so falling, that means they're less likely to be hawkish, therefore dollar weakens, and equities like that. So S&P, Nasdaq, Dow Jones, they rally and so on. Okay, so that's the basic premise for today. Let me tell you what happened last month. Last month we got expectations were that we will get 7% inflation reading in US, and the number came in line with expectations. So basically the consumer price index came in at 7%. So 7% expectations versus actual 7% number. No change. US dollar tanked. Equities rallied, S&P rallied, Nasdaq rallied, Dow Jones rallied, and you could see a bit of a oversold bounce back in euro dollar, oversold bounce back in sterling dollar, and so on. All the US dollar currency pairs reacted. Dollar CAD went down, Aussie dollar went up, and so on and so on. So this is where we are. This is going to come up any minute now, so that's why I'm keeping my positions open as it is. I have a stop on my euro dollar. I'm bearish euro dollar, and I would like to see euro dollar dip below 1.14. Let me show you the trend. This is the major level of interest. High, lower high, lower high, lower high. This looks like a potential breakout or a fake out, false breakout. These type of patterns, they have the tendency to break to the upside, which they did. I'm still shorting it. Okay, because the longer term trend is bearish, and I'm looking for a dip below 1.14. I got in a little bit sooner than that, and I would like to see something like this develop. A sell off to the downside, loss of 1.14, and then a possible retest of that level from underneath for another aggressive leg lower to here. That's what I would like to see. Okay, if I'm wrong, if markets react in such a way that US dollar strengthens in about 3 minutes now, then what will happen is you'll see a breakout to the upside here. I'll be stopped out, and that'll be a losing trade for me, but then I would need to reassess my analysis of euro dollar currency pair. So that's where we are with euro dollar at the moment. I'm gonna go down to a 15-minute time frame and leave this running for you. I think I've just messed up my charts. Here we go. The other thing that I wanted to show you is dollar Japanese yen. Very, very quickly. Dollar yen is uptrending quite nicely. That means US dollar strength. Now, the level that I was looking at was a pullback to 115 for another leg higher. That's what I wanted to see. Why? Well, we have sequence of higher lows. Can I draw a trend line? Yes, I can. Can I draw a trend line here? Yes, I told you this is going to be really, really basic. This is as basic as trading gets. It really, it's not complicated. If you are still confused with what I'm doing here, please go and check out my trading skills. You have loads of free courses there. Sign up, go through them, see if you like the way we teach. There is a course which basically explains using the trend recognition and using support and resistance. It's completely free, absolutely free. Check it out and see if that helps you out. Now, I would also be looking at the fib retracement here, and I would also be looking at the horizontal. So I have a trend line, I have horizontal, and I also have a fib. I have other few different things pointing to that level of interest, from moving averages in different time frames and few other things. I don't want to bore you with that, but this is the level 115. I would like to see a pullback to 115 and then a nice rally from there. So something like this happening. I might not get that. Okay, if we see a US dollar strength, what might happen is we could see a rally from the current levels and then possibly a breakout above this current swing high at 116.20, and then a retest of that level from above for another leg higher. I'm sitting in a bullish camp here. I would like to see US dollar react positively going forward. Not just today, but in general. This here looks like a little bull flag, and they have the tendency to break to the upside. Here we go. Here we go. Sorry, I've muted.
0.5%.
Oh my God!
Ex-food and energy 0.6%, with the ex-food and energy year-on-year at 6%. So just to recap, CPI month-on-month for 0.6%, year-on-year at 7.5% hotter. Ex-food and energy month-on-month for 0.6%. Ex-food and energy year-on-year at 6%, both hotter as well. The core index we still haven't received yet, but moving to initial jobless claims, 223,000, continuing at 1.621 million.
So a couple of news just came out. Initial jobless claims, i.e. how many people are claiming US unemployment insurance.
So US January consumer prices rise 7.5% year on year on an estimate of 7.3%. On the month, they come in at 0.6% on an estimate of 0.4%.
So that looks really, really good. Really good. Okay, guys. Plenty of things to talk about here. Market volatility breaking out right now. We have US CPI
238
number,
continuing
actually,
revised 1.621 million from a prior 1.628 million.
So inflation is 7.5. It's much higher than what market anticipated, and now we are seeing this bearish reaction here in equities. We are seeing bearish reaction in gold, bullish reaction in US dollar. Look, you look at a dollar card pushing higher. Okay, dollar yen pushing higher, sterling dollar lower, euro dollar lower. So that's all very, very, very good. Okay.
Layer disconnected, layer connected.
Now, let me see, where are we at the moment? Where are we at the moment with...
So we're now seeing Fed swap showing a full percentage point of hikes by July.
So this is my euro dollar. Euro dollar is pushing through. Really happy with that. And also I was looking at that US crude oil. and US crude oil is still in the money. Happy with that. Both trades on, really happy with that. So I just realized, there we go. I'm back. Sorry, I don't know what happened there. Just realized. Guys, it was lovely talking to you. This is going to be really fast, 15-minute only. I will be moving on to TraderCast community right now to carry on with my weekly market, midday market analysis, where we'll go into more detail looking at S&P, Dow Jones, Nasdaq, gold, oil, other currency pairs as well. Thank you for watching. Thank you for listening. Stay safe, happy trading, and hopefully you've enjoyed it. Bye for now.